Hi students, this is Balakrishnan again. Welcome to BALAS Accountancy Special Classes. And the current one is episode number BSc 043. Well, in continuation of my last episode, that is episode number 042, this one is also to deliver the comprehensive lecture in respect of my working out of Cbse sample question paper 2022-23. I repeat, to deliver the comprehensive lecture in respect of my working out of the Cbse, your Cbse sample question paper 2022-23. Okay. This video will be dealing with part B of the question paper, that is analysis of financial statements, and that too the objective type questions totaling 6 numbers. I do hope in your final preparation for your ensuing exam, these episodes will immensely help you. So, as usual, let me switch gear to my sharing section of this video. Sharing of files and explanation thereon. Thank you. Well, question number 27. Financial statements are prepared on certain basic assumptions or prerequisites known as dash. Four different answers they are given. And answer C, postulates, is the correct answer. And my explanation is that, first of all, we should know what do you mean by postulates? A thing suggested or assumed as true as the basis for reasoning, discussion, or belief. That is the meaning of word postulates. That much only. If you postulate something, you suggest it as the basis for a theory, argument, or calculation, or assume that it is the basis. It is the very basis. The following items given as different answers in the question is just some of the components of postulates only in preparing financial statements. A, provision of Companies Act 2013. B, accounting standards. D, basis of accounting. But the assumptions or prerequisites in preparing financial statements are called basically postulates. That has been indicated against item C. So answer is C. Okay. Now next one. Well, optional question of question number 27. Which of the following is correct? First one, quick ratio can be more than the current ratio. Second, higher inventory turnover ratio is good for the organization except when goods are bought in small lots or sold quickly at low margins to realize cash. And the third one, sum of operating ratio and operating profit ratio is always 100%. They have given us 4 different answers. And answer C, only item number 2 and item number 3 are correct. So let me explain why it is so. Item number 2, stock turnover ratio, that is nothing but inventory ratio, is nothing but it's a measure of liquidity. It measures how fast the stock is moving through the firm and generating sales. Higher the ratio, the more efficient the management of inventories and vice versa. Okay, that means higher inventory turnover ratio is good for the organization. However, when goods are bought in small lots or sold quickly at lower margins to realize cash, it may not work. So this answer is perfect. It is correct only. Let us move to the next one. Third one. Why that is correct? Sum of operating ratio and operating profit ratio is always 100%. My explanation is operating ratio and operating profit ratio are complementary to each other. If one of the two ratios are deducted from 100, another ratio is obtained. If operating profit ratio is 25%, it means that the operating ratio is 70%. I'm sorry, it is not 70%. Small mistake. It will be 75%. Okay, fine. Hence, operating ratio plus operating profit ratio is equal to 100. That's what exactly they have given. Sum of operating ratio and operating profit ratio is always 100%. Okay. So these 2 and 3 are correct. Okay. What is the question? Which of the following is correct? Answer C is correct. However, incidentally, let me explain why item number 1, quick ratio can be more than the current ratio is wrong. Let me explain that one also. See, current ratio, we know well, you have learned all this by this time. Current assets upon current liability is called current ratio. Liquid ratio, which is otherwise called quick ratio, is nothing but liquid assets upon current liabilities. Or in other words, liquid assets or quick assets upon current liabilities. Liquid assets are within current assets only. Liquid assets total amount can never exceed the current assets total amount. Hence, the sum of the components, or in other words, the total of the components in the numerator of the equation for liquid ratio can never be more than that of current ratio. I repeat, the total of the components in the numerator of the equation for liquid ratio can never be more than that of current ratio. This will invariably result in quick ratio within current ratio. If you are still not clear, it is like this. Let's assume that current assets, including inventory rupees 3 lakhs, prepaid expenses rupees 1 lakh, total is 20 lakhs. So our total current assets, let us assume as 20 lakhs, and let's also assume our current liabilities total as 10 lakhs. And current ratio 20 upon 10, 2:1, or otherwise 2 times. You know that. Well, liquid ratio means what? We will exclude this inventory and prepaid expenses. That means it will be 20 lakhs minus 3 lakhs minus 1 lakhs. That is 16 lakhs. 16 upon 10 lakhs means 1.6:1. That is nothing but 1.6 times. Okay, this is the way it works. Under no circumstance, we can make a liquid ratio that will exceed more than the current ratio. Okay. Hence, the answer, quick ratio can be more than the current ratio, is absolutely false. Okay. So the answer to this question is C. Only 2 and 3 items are correct, which I explained. Now, next one. Question number 28. From the following, calculate interest coverage ratio. Net profit after tax is rupees 12 lakhs, 10% damages of rupees 1 crore, and tax rate being 40%. As usual, 4 different answers have been given, and the B 3 times is the correct one. Let me explain it. Well, my dear students, you know by this time, because you are revising for Cbse final exam, that interest coverage ratio is nothing but net profit before interest and taxes upon interest on long-term debt. This is not. Net profit before interest and taxes. Okay. So, in a statement of profit and loss account, the net profit comes after charging interest as well as the taxes. So, we must get a position net profit before interest and taxes. Okay. So, net profit after tax, they have given clearly after tax, what is that? 12 lakhs, right? It implies net profit after interest and after tax. Why? Because tax is the final item that is shown. It comes after so many nominal accounts being levied or debited. Okay. And tax rate has been given as 40%. That being the case, remaining net profit, that is after this 40% tax rate, will be 60% of net profit before tax and after interest. Is it not? Tax rate being 40%, remaining net profit will be 60% of net profit before tax and after interest. That point you should carefully understand. And that amount has been given as 12 lakhs. Okay. How the 60% we got? 100 minus 40%. Okay. Hence, net profit before tax and after interest will be how much? Just divide 12 lakhs by 60% or 12 lakhs into 100 upon 60. That comes 20 lakhs. Okay, that is, what is this 20 lakhs all about? Net profit before tax and after interest. But still we have to get net profit before tax and before interest, a portion we must get. Okay, fine. Now, if you add back the interest, we will get that position. What is the interest expenses? Now, what is the interest obligation? On a face value of 1 crore on a long-term debt debentures, 10% debentures. Okay, 10% debentures, 1 crore. That means it is nothing but 10 lakhs. That is my interest obligation. Let me add it back. How much it comes? 30 lakhs. So net profit before tax and before interest is nothing but 30 lakhs. 20 plus 10, 30 lakhs. And that being the case, what will be my interest coverage ratio? What is interest? 10. Okay. So 30 lakhs divided by 10, that is nothing but 3 times, is it not? Net profit before interest and taxes, that is nothing but 30 lakhs divided by interest on long-term debt, that we have calculated as 10 lakhs. How did we get 10 lakhs? On the face value of the debentures, interest rate 10%, so 10 lakhs. That being the case, 3 times is the answer. Now let us verify the direct way. Okay, net profit before interest and taxes is 30 lakhs. Okay, first deduction, less interest on long-term debt. How much? 10 lakhs. So it is now 20 lakhs. That is nothing but net profit after interest. Less income tax 40%. That is 8 lakhs. 40% of 20 lakhs is 8 lakhs. Hence, net profit after tax is 12 lakhs. That's a perfect answer. That's what they have given here. Okay. Now, next question. Question number 29. Insurance claim received by Albert Company Limited of rupees 5 lakhs for loss of machinery due to theft. I repeat, loss of machinery due to theft will be recorded in cash flow statement in which of the following manner? So 4 different answers given and answer B is the correct one. The question is basically how to deal an extraordinary item in a cash flow statement. Answer B. Subtracted under operating activities as extraordinary item and added to operating activities also. Let me elaborate it. Treatment of extraordinary items in a cash flow statement. Now, extraordinary items are non-recurring in nature. These are all abnormal gains or losses that is not generated from ordinary business operations of a company and is infrequent in nature. I repeat, it's very much infrequent in nature and is unlikely to occur in the foreseeable future. Okay. Now, we all know that net profit before taxation and extraordinary items. I have shown it in inverted comma. That is net profit before taxation and extraordinary items. Is the very first step, or rather the very first item shown in a cash flow statement. And that too, under the very first activity, cash flow from operating activities. We know there are 3 activities. operating activities, investing activities, and financing activities. And this process is done under cash flow from operating activities only. Now, extraordinary item expenditure nature are added and extraordinary item income nature are deducted from the net profit. I repeat, from the net profit, while arriving at the above net profit before taxation and extraordinary items. This is invariably the first action in dealing with an extraordinary item. Okay? However, cash flows, physical movements part, should again be classified and disclosed separately as arising from operating, investing, or financing activities. Obviously, the second adjustment of extraordinary item can be the part of any of these three activities of cash flow statement. Further, any inflows are added and any outflows are deducted in arriving at the net result of such an activity. Okay? Now let us go back to the question. Insurance claim. Insurance claim received is very much an extraordinary item, and that too income nature. Okay? Hence, as an extraordinary income, the same is basically deducted in arriving at the net profit before taxation, as already I explained here. Okay? Further, as an inflow, the same will be again added to the, I repeat, added to the operating activity, since insurance claim received is only an operating activity. Okay, so it is deducted and again added both within the operating activities. Okay, this is shown here. Answer B is the correct one. Subtracted under operating activities as extraordinary item and added to the operating activities also. So answer B is the correct answer. Okay, fine. Subtracted under operating activities as extraordinary item and added to operating activities also. So I explained also why it is so. Okay, now next question. Now, optional question of question number 29. A company issued 20,000 9% debentures of rupees 100 each at 10% discount. These debentures were to be redeemed at 15% premium at the end of 5 years. The balance in securities premium account as on that date of issue was rupees 3,70,000. How this transaction will be reflected in cash flow statement? As usual, for different answers, they have given an answer. Item number C is the correct one. That is, added rupees 1,30,000 under operating activities as loss on issue of debentures, written off, and inflow of rupees 18 lakhs under financing activities. Now let me explain it in detail why this answer is correct. Basically, you should know that a company issued 20,000 9% debentures of rupees 100 each, means face value will be 20 lakhs. And there are two categories of loss on issue of debentures here. One is issued at a discount and also to be redeemed at a premium. Okay, so total loss on issue of debentures is 5 lakhs. How I got 5 lakhs? Discount on issue of debentures, 10% of 20 lakhs is 2 lakhs, while premium on redemption of debentures is 15% of 20 lakhs, that is 3 lakhs. So 2 lakhs plus 3 lakhs, 5 lakhs. That much is clear? Yes. So this is the total loss they have to accommodate. They are already equipped with security premium of rupees 3,70,000. First, they lay their hand on it. Okay. balance only they will resort to debiting the profit and loss statement. That will be how much? 5 lakhs minus 3 lakh 70,000, that is 1 lakh 30,000. That's the way they will manage it. Okay. So in the cash flow statement, how it will be accommodated now? First adjustment, added under operating activities as loss on issue of debentures written off, because non-cash and non-operating items are to be added back as an adjustment. Okay, that is the basic rule. That will be to what extent? 1 lakh 30,000. Is it not? Right. Now physical part. Amount received on issue of debentures, that is 20 minus 2 by 18 lakhs only came to the bank, net of discount. To be shown as an inflow under financing activities. These two are what have been indicated in the item C. Added rupees 1,30,000 under operating activities as loss on issue of debentures, which I explained now, and rupees 18 lakhs under financing activity. So answer C is the correct one. Okay. Thank you. Question number 30. From the following information, find out the inflow of cash by sale of office equipments. 31st March 2022, office equipment value rupees 2 lakhs. 31st March 2021, office equipment value rupees 3 lakhs. Additional information. Depreciation for the year 2021-22 was rupees 40,000. Purchase of office equipment during the year rupees 30,000. Part of the office equipment sold at a profit of rupees 12,000. And as usual, 4 different answers have been given. And answer B, rupees 1,02,000 is the correct answer. Now, I will explain why this is the correct answer. Well, at the outset, please be very vigilant about this one. They have first given the closing balance followed by the opening balance, because last year's closing balance is nothing but this year's opening balance. That point you must not forget. So if we just prepare the asset account, that is nothing but office equipment account, we will get the missing figure. Let us show the opening as well as closing balance. We all know that in an asset, opening balance comes in the debit side. That being the case, diagonally opposite has to come the closing balance. Okay, right. So opening balance is how much? 3 lakhs. This you have to be at most careful. 3 lakhs. And this is closing balance. Let us place it properly. 3 lakhs and 2 lakhs. Now one by one other items. Depreciation 40,000. What's the journal entry? Depreciation to asset, or in other words, asset by depreciation 40,000, right? Next one, purchase 30,000. What's the entry? Asset to bank 30,000. Now the third one, part of the office equipment sold at a profit of 12,000. Profit part only they have given, not the amount realized. Okay. When an asset is sold, we all know that 2 entries we have to pass. One is bank to asset for amount realized, and asset to P&L account or P&L statement, whatever it is, for profit on sale. And reverse entry, suppose it was on loss. But here it has been sold at a profit. So the journal entry will be asset to P&L account, and the amount is how much? 12,000. So let us show office equipment to P&L account 12,000. Now just get the missing figure in this account. We will find 1,02,000. How do you, by the way, balance an account? Total the heavier side, put the same total across and find the difference. Okay, that is the missing figure, right? This denotes sale. What's the entry for amount realized on sale of an asset? Bank to asset or asset by bank. And this 1,02,000 is the correct answer that has been shown against item B. rupees 1,02,000. Correct answer. Okay. So, my dear students, I hope these two episodes have helped you a lot in your preparation for the ensuing board exam. I don't think anything more is required because as far as this particular sample question paper is concerned, because I have gone through the question, remaining things are self-explanatory in the answer keys. However, I'll again go through. If required, I'll get back to you. And during these intervening days, especially, you have a few days before the accountancy exam. Now, at that time, my videos should immensely help you. I hope so. So take care of yourselves. See you soon.